Welcome everyone. I'm so excited. I'm so excited to have you around today. Um, it's actually a great day, and I am set to teach you something very, very important, something very, very essential. I know most of you have been waiting for such a time as this, but the time did not avail itself on time. So, but we actually um, are at the right time. Nothing is late, nothing is too early. Now, I want to share with us or quickly teach us something I find interesting in Forex. Now, many people have been um, asking me the difference between support, resistance, demand, and supply. And it seems as if there is no difference. In fact, in some of my videos, I used to use the word interchangeably, not because there is no difference, but I I I tend to do a video one day such as this, which I'm doing, so that many of you will come to the understanding of these um, functions of this technical word: demand, supply, support, and resistance. Now, I want us to understand that support and resistance is actually a different ball game between from supply and demand. Now, support and resistance is a zone on its own, while demand and supply is the effect of price Now, watch this video to the end. Don't skip any part of this video, because I will be showing us with practical examples of the differences between demand and supply, and then I'll be showing you how you can combine demand and supply, and then support and resistance to trade accurately in the financial market, the forex market, and make profit. In fact, beyond the financial market, the crypto market also, you can use this kind of knowledge and then trade and make profit. You get it? You can trade and make what? And make profit. Now, this video, if you look at recently, my videos are not streamlined only to forex. Now, you can use it in stock, you can use it in indices, you can use it in any kind of instrument, crypto, and etc. etc. Now, why I'm doing this is so that I can broaden your knowledge and help you in order for you to have a holistic approach towards your trading career, not just the forex trading. Now, let's quickly move on. First thing first, I want to give you this time. If you have not subscribed to this channel, do well to subscribe right now, right away. Subscribe to this channel right away, and click the notification bell so you'll be notified whenever I upload a video such as this. And also give us some likes and share this video. If you find this video interesting, share this video to your families, to your friends. If you have done just this, I appreciate you. Now, once again, I want to appreciate our returning viewers and also our new viewers. I know that you'll be learning a lot from this channel, and we'll continue doing our best to bring to you um, trainings and teachings on financial markets, especially forex and crypto, so that we'll make profit from it. Yes, definitely. Now, thank you so much. Now, let's quickly move on to the definitions. Now, first of all, I want to define what support and resistance is before demand and supply. Now, support is actually a price level where a downtrend tend to pause or stop or reverse. When where a downtrend tend to stop, pause, or reverse, that is support. When a downtrend tend to pause, reverse, or stop is what is area of support. Let me quickly show us here. our area of support. Now this is a downtrend. This is a downtrend. And this downtrend, you will see that is actually a proof of our area of support and resistance. Let me increase a little bit. Okay. Yes. Look at it. Now, this is an area of what? An area of support. Look at it. It's an area of support. It's an area of support. Okay. Now, where price pause or reverse due to strong buying um, um, volume, this act as our area of what? Of support. Now, for example, you are sitting down. The chair you are sitting on is actually giving you what? A support, so that you will not what? Go down. That is what it means. Where there is actually a strong buy signal or buy volume that makes the sellers not to um continue selling their instrument or their commodity, is actually what? Is actually a support. Actually an area of what? Of support. Now let's take it to this point. Let me use this particular one. Now this is an area of support. Now this is an area of support. You see it's very clear here. Very clear. Let me draw another line, another box, so that we will know that this particular place is our area of support. Now that's our area of support. Now follow me quickly. Now resistance. Resistance. Now our area of resistance is actually a price level where an uptrend tend to stop or reverse due to strong selling pressure. Now, this can serve as what? As a ceiling of our price. When there is a strong selling pressure, the buyers will not be able to continue what? Buying the commodity. They won't be able to continue buying the commodity. Now, look at this. That is what? That is a resistance. So you can imagine we're having what? We're having two resistance here. This is verified resistance. Now you see one of the things that we need to understand as regards support and resistance is that it need to touch at least two or three levels. Now you discover that this has touched two levels. So this has touched this a level, this a level, this a level. And this is what? This is a verified resistance. It's called a verified resistance. It's called a verified resistance. Right now, let me use this particular one. It's called a verified what? Resistance. You see it? It's called a verified resistance. And I'm doing this so that it will be clear to us and we'll have more understanding. And that is our area of what? Resistance. While here is our area of what? Our area of support. Now that we have understand this, now look at this particular place also. We can also draw this as our area of what? Our area of support. As our area of support. Now you can see that support is actually different. Support is down, resistance is up. Support is down, resistance is up. and we have broken support, we have broken resistance, we have verified support, verified resistance, we have unverified support, unverified resistance. All of these um, are actually types of resistance and support. We have tested support and tested resistance. Now, I have done a video on that already. I just want to do this on differentiating between support and resistance and demand and supply. Now, let's quickly move to demand and supply. Let's quickly move to demand and supply. Now, demand is actually the willingness and the ability of buyers to purchase an asset at a given price. The willingness of buyers to what? Purchase a commodity or an asset at a given world price. Now, I want us to understand that the higher the demand, um, the they up the movement of the market, which means that the more the demand, the bullish the market. You see it. When there was a demand here, price begin to move up, come down, and continue to what? Continue to move up. So the higher the demand, the bullish the price movement. The bullish the price movement. Now, when we're talking about bullish, we're talking about uptrend. We're talking about what? Uptrend. Now, it is demand that makes this price moves up. That's just it. It is demand. Because if there is demand in the much demand in the market, it means that sell that commodity is scarce. So everyone is trying to what? Harness that asset, harness that opportunity to get what? Profit. So you see that the price will definitely what? Skyrocket. If a commodity in the market is in excess, is surplus, the demand of it will what? Reduce, which means that it has what? More supply. That's just what it means. Now, in other words, the supply now is the willingness of sellers or the ability of sellers to actually sell a commodity or an asset at a given price. The higher the selling pressure, the bearish the market. Now you look at it. Now we begin to sell from here. There was a selling pressure here. You see it, and then you begin to sell down to this point before there was a movement upward. Now, with this, now we'll be able to have an understanding on what demand and supply, support and resistance is. Now, demand is actually the willingness. Supply is actually the willingness. While the support and resistance, they are actually zones. They are actually zones. Now, let me show us something. Let me show us something quickly. Now, look at this resistance here. Look at this resistance here. You will discover that in this resistance, we were not having a supply. The supply came at this particular place. This is where the supply started, where there was volume for selling. Right? Because all through this particular place, we had less volume of what? Of sell. It was after this breakout that we saw that there is what? There is volume for selling. There is volume for selling. Now, you see, demand and supply brings about volume. In fact, let me explain to us few of the characteristics first. Now, let me just give us few characteristics of support and resistance. Now, support and resistance are not the exact price, but they are what? They are zones where price action tend to react. They are not the exact price. They are what? They are just zones. They are zones where price tend to what? Tend to react. That's the first characteristics, the key characteristics of supply of support and resistance. Sorry. Now, the second characteristic I want us to understand is that they can actually help us to identify um, previous data or previous history, and we can use trend lines, moving averages, which are psychological level, for us to understand um, the support and resistance. In fact, support and resistance support previous or history data. It support history data. Like for every area of support and resistance, price normally what respect that level. Now look at what happened here. Price still came back, respected it here, and respected it here. Now, if we move further, still we'll discover that price will definitely respect it in the future. Look at it. Let's move and see. See, that is up here. Okay. Still going down. Okay, that's not, is on bearish move. If not, you will discover. Okay, let's look at this second line here. Look at what happened. You see it. Price came and respected this level here. Look at it. There was reaction at this level. You see what I'm talking about? There was reaction. There was reaction. Look at the next one. You discover that there will be also reaction. Also, you see it. Price what? Price respected the level. You see it here. There was a reaction here. There was a reaction all through down to this place. There was what? There was reaction. You see, there was actually what? There was actually reaction. Now, price will always respect previous data, previous area of support and resistance. Price will always respect that level. Price will always respect that level. Now, I want us to understand something also. Part of the key characteristic that these levels can switch roles. Now, a broken support can become resistance, and a broken resistance can become what? Support. A broken resistance becomes support, and a broken support becomes a resistance. Becomes a resistance. Now, look at this particular place. Look at this here. From from here, we saw price coming here to form what we call support, and after sometimes the support was what? Broken. The support was broken. So now this particular place now serve as a resistance, and this that is going down will become our support, our new support. So when price break a previous support or resistance, it now turn to become um, another pattern for us to trade, another pattern for us or techniques for us to understand the market and trade and get profit. Put it at the back of your mind. There is no loss either ways. Either it is not support or it is not resistance. Why? Because if it breaks, it will definitely bring one of them back again. It will definitely bring one of them. So now, the characteristics or the key characteristics of demand and supply. Now, one of it is that demand and supply are fundamental economic factor that support price movement in the market. They are more of fundamental economic factor. When we talk about fundamental economic factor, I'm talking about news. In my last video, I taught us how we can actually um, go around news trading. How we can go around news trading, because fundamental factor is one of the key factor, one of the key techniques and means whereby we can actually make what? Profit. So demand and supply are actually fundamental economic what? Forces that actually drive price movement in any market. It drives price movement. Now, I want us to understand that demand and supply are actually influenced by market sentiment, individual sentiment, institutional sentiment, retail investor sentiment, etc., etc. We also have economical data. We have economical data. That means release of um either there is actually improvement in the economy or not. This is what we talk about. This is what we're talking about. Talking about economic what? Economic factor or economic facets. Now, is it what? It affects it. It affects it. Now, I want us to understand also that in technical analysis, um, our supply and demand, our supply and demand can actually give us um, a signal. It can give us a signal for a buy and for a what sell, which means that we can use the both of them to signify what entry that has pressure, and then um, when it does not have pressure, because what gives pressure in the market is our demand and it's our supply. So without the demand and supply, there won't be what pressure in the market. Look at the pressure here, the pressure to sell. Look at the pressure to sell. That's the pressure of what? Of supply. Pressure to sell. Now, having understand this, let me show us clearly what this um demand and supply is. Now, demand and supply strictly, it is the candlestick that introduce volume in the market. The candlestick that introduce volume in the market. Now, this volume can be volume for demand, which is for buying, or volume for supply, which is for sale. But so far as there is actually introduction of volume or liquidity money in the market, it is what? It is the function of demand and supply. And for you to be able to identify that, you need to identify the candlestick that comes with the measure move. The candlesticks that comes with the major move. The candlestick that comes with the major move. Because the price can be moving in its own way without much volume, without strength, momentum, and then here comes an introduction of what? Of money, and then there will be what? A major move. Now, for us to identify demand here, let me use this for us to identify demand here. Now, this is our demand zone. See, that's the candlestick that have what? The major move. That's it. It has what? The major move. The candlestick has what? Major move. See it, major move. You see, you see it. You see the correlation. This is where the major move happen. This is where the major move happen. And then let's look at the selling, which is our supply. This is the major supply. This is our major move downward. You see that there is difference between what? Between support and resistance and demand and supply. You see, I only use the horizontal line for support and resistance, while that of demand and supply, I use the rectangular what? I use the rectangle. I use the rectangle. in order to signify it. And you can actually see that what happened previously, the market still came, tested that level of our demand, and then um, before it moves, before it continue moving. Now, this alone is actually telling you that there is relationship between our demand and supply and our support and resistance. Now, what are the rules of demand and supply and this um, support and resistance in trading? Now, support is actually a sign or a signal for potential buy opportunities. Once price reach what support, this is our support. Once price reach this support, you will know that there is possibility of what, of buying, possibility of reversal also. Now, traders place buys orders near this region, the region of what? The region of support. They place what? Buy orders, buy orders near the region. Now, stop loss orders are placed below the region also. Like for example, we are what? We are we are on our support here. If we want to put stop loss, we'll put it below here. If we are on our resistance here, we want to enter support, we'll put it above our support. We put it above our support. So that is the work of support and resistance. Now, the next thing I want us to look at is actually the same also happen with um, resistance. I want us to look at the role of demand also and supply. The role of demand and supply. Now, demand and supply now tells us that there is actually liquidity in the market. There is actually what? Liquidity. Look at it. There is actually strength in the market. Look at what happened here. Look at what happened here. Just imagine what happened. Now you see that there was a long candlestick showing strength of what? Of sell. And it started happening at the area of what? Resistance. That is one thing I want you to understand. Area of what? Of resistance. That is one of the key things here as regards the role of demand and supply. Now, one of the applications of these support and resistance trading is that you can actually trade what? Reversal. That is what we call reversal what? Trading. You can also what? Do what we call breakout trading. Breakout trading. And then we are having risk management, because it helps us know where we'll put our what? Stop losses. Like I just explained. For example, you're entering a sell at this particular place. You're entering sell here. Your stop loss will come. Your stop loss will come at this particular place. So you will be able to know that if it reaches here, you're out of the market. You're out of the market. So you need to understand this. You need to understand this. That is risk management using our stop losses. Now, we can either trade reversal or we trade what? Breakout at the level of at the zone of support and resistance. Now, The rule of demand and supply is that once there is demand, price increase when buyers will dominate. Price increase. Price, you see, is going up. Is actually a proof that there's actually a dominance of what? Of price. There's actually a dominance of price. Price are actually what? Increasing. That is just what it means. And if you look at this cell, this arrow coming down for a cell is because price is actually what? Decreasing. There is no strength in the market. There's no um volatility in the market. So price is what? Prices are what? Are going down. Now, traders look for significant sign for higher demand and supply in order for them to make what? Profit. Because once you can figure this, which I'll be teaching us, watch this video to the end, because I'll be teaching us the combination of the two of them and how to trade to make profit. How to trade to make profit with them. Just watch the video to the end. I'll be teaching us the combination of them and how we can use them and make what? And make profit for ourselves while we trade the forex market. Now, demand and supply actually drive price. Either it is decreasing or increasing. Either it is decreasing or increasing. So now, um, while the price decreases, we know that actually there is what we call less buying pressure. When price what decreases, there is less buying pressure. Now, this also help us in volume analysis. That's high trading volume, both at support and resistance, indicate strong demand or supply. That's why I said we need to watch this video to the end. Don't skip any part of this video. Now, high trading volume at support and resistance actually indicates strong demand or supply. Now, if there is high trading volume in the support area, which means that there is what? There is high demand. If there is high trading volume at resistance, which means there is what? Strong supply. Now, the third thing there is that it helps us to confirm what? Trade. That's trade confirmation. When there is what? There is volume, there is demand and supply, is what? It helps us to confirm trend in the forex market. Now, rising price with increasing volume suggests strong demand, while falling price with high volume indicate what? Strong supply. That's just what I was actually explaining. And then the last is the market imbalance. Now, the market imbalance. Now, traders actually explore market imbalance between demand and supply, such as buying when the demand surges, that goes up, and then selling when the supply is overwhelmed. That means when it is when the supply has enough strength to what? To drop it down. It overwhelmed the buyers, so it dropped down. Now, I want us to look at practical examples. Now, practical examples of how we can combine these two in order for us to make profit, because all we need is profit and not stories. Now, let me cancel everything. This is one of the major area of this video. I don't want you to skip this for any reason. Now, look at this. Watch this with the whole of your mind, the whole of your eyes and everything. Now look at this example here. Now this is area of what support. These are area of support. These are area of support. And then look at area of demand. This is our area of demand. This is our area of demand. This particular candlestick here, this particular candlestick that went up here. Look at the candlestick. This particular candlestick. This particular candlestick that validate the movement upward. Look at it. Validate the movement upward is what we call our demand zone. So you see that this is support here. We're having support and we're having what? Demand. Support and demand. Look at how it went far and still continue in direction of the trend. Look at it from here. This is our what? Support zone. Our support zone. And look at here. Here is our what? Demand candlestick. Now how can we validate this? Now when we see a bullish candlestick with high volume, when there is a bullish candlestick with high volume, it means that we are what? We are buying. We are going what? Bullish. Means that it's actually a confirmation for us to what? To trade this bullish. Now let's look at this particular one. Let's look at this particular one, guys. This is our resistance zone. This is our resistance zone. This is our resistance zone. And here is our supply. This candlestick supply it. Look at the candlestick that actually brought about the movement. Is this particular candlestick here. This particular candlestick. Look at it. After this, look at what happened. There was actually what? A strong selling pressure here. In fact, downward. Strong selling pressure. So once you can verify your support, your resistance, and get your supply zone, you can be able to trade the market very well. Can be able to trade. This is what we call pure. You see, this is pure technical action in trading or price action. Now look at what happened here. Look at what is happening now. With this now, you should be able to know that this will continue the trend downward. This will continue the trend downward because we have not seen any sign that there is actually weakness in the selling of this commodity, which is the Euro USD. There is no sign that there is tiredness. You get it? So we continue we continue trading it down. That is it. We continue. So at some point when we reach support, a very strong support, a very good support, we'll definitely witness what we call reversal. At that time, we'll be having demand. And once you see that demand, enter the trade and harvest your profit. So guys, this is just a video. This is how we can actually trade both support, resistance, demand, and supply together and make profit. Thank you so much. If you find this video interesting, kindly do well to subscribe to this channel, and then do well to share this video to your family and friends. Thank you. See you in the next video. Thank you for watching this video. Do like, share, comment, and subscribe to this channel for more information.